Oh man, so when will these leveraged longs learn? 160 million of leveraged longs wrecked over the last 24 hours. When will these traders learn? Bitcoin having a crazy volatile day yesterday, but recovering today with a 2% up day at the time of recording this video. We're going to look at the Bitcoin charts. I'm going to show you the key pattern which we must hold on Bitcoin for us to have a chance of running back to 44,500. We're going to look at the wider macroeconomy. We're going to look at the charts. I'm going to show you the key levels of support and resistance that we need to hold. So make sure you hit up the like button, subscribe, check out NordVPN who is supporting this video, and let's get straight into the video. Because here, guys, as you can see, as I mentioned, 160 million in leverage longs wrecked yesterday, and today already another 40 million contributing. When will they learn, guys? Look at this. We're getting like the Burj Khalifa here with a bunch of different skyscrapers here around Manhattan on some of these leverage longs. And this is what I was warning about. There are a lot of people helped by YouTubers who put links in description for 100x long position. And guess what? A bunch of them got liquidated. They just made videos today saying how they got liquidated. They don't talk much about it. They just have to mention it quickly, you know? Well, my stop got hit. Yeah, you mean you got liquidated on your 100x long? You crazy, crazy people. And even worse, I don't care what they're doing with their finances. It's the fact that they're making it so normal for new people in crypto to come watch their channel. Because by the way, YouTube wants to recommend those videos. And then people start thinking, hang on a second, if they're doing it, that's how they became millionaires and sitting on their private jets, then maybe I need to 100x long as well. This is not good for the crypto space. It's not good for you. It's not good for new investors. And it's not good for the wider space as a whole, because every time Bitcoin tries to get going, we get these false starts. And yesterday was a great example of that at a key level. And yesterday, we covered the video yesterday. We're in green at the time, but I remember mentioning that we had big wicks on the candle. The candle wicks got even bigger as the day played out yesterday. You can see here running as low as 37,161 on the daily candle, as high as 39,556, almost 40,000, all the way at the top of this candle. Big, huge swings of a day. Ended up down on the day. And you can see a bunch of people got liquidated because it faked itself out of the pattern to purposefully mess up those longs, right? It liquidated them and then it came back in the pattern. So very interesting how this works out. This is why you should not trade with leverage, as you will get liquidated by these wicks, because the market makers, the big bears, they know what they're doing. They know how to liquidate you. And now we've got a big strong green day here, up 2.5% on Bitcoin. And we need to work for our key levels now, which I'm going to show you here on Bitcoin. But before I head over into the hourly, I do want to take a quick look at the weekly, because here on the weekly, let's not forget, what pattern are we forming? We're forming this pattern where we've got this important neckline here at 30,000 mark, and we've tested it. I mean, obviously we ran through, tested it once, ran up, came back down, tested again, and now we're coming for it again, right? But we've managed to create a higher low, and this is good. As long as we can rotate without having to get lower than this purple line, we're in the good here on Bitcoin, and there's not too much to be worried about. The worrying sign, however, is that we're struggling to break our weekly positive, our weekly EMA. In fact, let's go to a tidier chart just to see if I can show you this a bit more cleaner. Here, we're struggling to get above our EMA here on the weekly. You can see this last week, the week before this one, on that weekly candle, we had our crazy wick all the way to the top side here. If we got to close above 45,000, we'd be in the good. But you remember how we got rejected by CPI, how we got rejected by the Ukraine tensions with Russia and the war, and we got thrown right back down now into, continued bearish territory, because we're still bearish here on our weekly EMA ribbon. So a lot of work to do. We got to get the close above 45. Right, that said, let's look at our hourly. And on the hourly, let's just do that back on our messy graph with our diagrams. You will see that we're in this important channel. Okay, we've got to work back towards the top of our channel, but before doing so, we've got some key levels, and those key levels are the first one, which we're at now, which is 38,405. We cannot lose this level. This is a very important level. If you're watching the video, this level holds pretty true for a long time. We've got to hold support here. We've got to work back towards 40,000. That 40,000 again is going to be the key level where the money FOMOs back in. Okay, so we need to see work to get us back above 40 and then build from there here on Bitcoin. And remember, if you're just simply looking at the range of this pattern, you've got a quick move all the way up to 45,000, right? That's what's happened here. We tested it once, bounce, tested again, bounce. Are we going to head back up and test it again? Or are we going to fall out and have downside risk to the bottom of the wedge, which, by the way, just for reference, because we have to be prepared for it, the bottom of the wedge would take you down to 33,000 territory, okay? That's what we got on our hands here on Bitcoin. Now, let's take a wider look at the markets, because here on the US markets, we can obviously see that the Dow Jones is up 1%. We got 0.75% up on S&P, and the Nasdaq up 1.3. And again, this is just, this is not a massive green day. It's kind of just a little bit of a pickup after the worst day since October 2020 on the S&P, which was yesterday. And again, we still got a rhetoric around heightening inflation and worsening conditions, with Russia warning of $300 oil, threatens to cut off European gas if West bans energy imports. We've heard a bunch of different things. Shell have banned imports of oil from Russia, and things are starting to look pretty bad on that front, right? And it's going to have an impact, of course. But Bitcoin, despite all of that, is holding up pretty well. I mean, to put things into context, we've got CPI reading in 2 days' time. That's Thursday. We've got a first interest rate hike expected on March the 16th. You've got Russia and Ukraine tensions. But Bitcoin is still sitting at the door of 40,000. We should be looking at the positives here. That this is an interesting situation to be in. Bitcoin is holding up well. The narratives are showing that more and more people are turning to Bitcoin for its original use case, not for speculation. Countries are now using Bitcoin because they're seeing the value in it. And that is why all of these things that are going on, whether it's Ukraine using crypto, Russia using crypto, Canadian truckers using crypto, people are using it. And that's good for crypto from an investment point of view. It's showing that it's there for a reason and that it has a true use case as a hedge against the establishment, against the existing fiat monetary system. And that should bode us well for buying the dip and holding this for the long term. And that is why I'm so confident that anybody who's still buying Bitcoin today, sitting here at 40,000, they're going to be laughing years to come from now. If you just zoom out here on the weekly, this is just, you can't bet against something like this. You can't bet against this kind of a curve. There's no reason to suggest that this is just going to come crashing down when you saw the growth we've had with far less adoption going on here, far less attention, far less use cases. What has changed fundamentally to suddenly say, oh, Bitcoin's heading to the downside? And look, some people are saying, oh, the executive order by Biden, or, the sanctions are going to be an issue because Russians are using Bitcoin to bypass the sanctions, and therefore more regulation is going to be bad for crypto. No. You got to understand, regulation takes time to put into place. The governments don't actually understand crypto. How are they going to regulate it? They will try to regulate it, and it'll take them time, and they'll start regulating it. But basic level of regulation is good for crypto. I always use the analogy. It wasn't until traffic lights that cars became ubiquitous. You need a certain level of safety to avoid people getting scammed, to reduce volatility, to get rid of those leveraged longs who keep wrecking the market, and meaning that we have this crazy volatile asset class. We can get rid of that. It'll smooth out the market. We'll have more predictable swings on Bitcoin, and Bitcoin can actually become more of an investable asset class for so many trillions of dollars sat in other asset classes where hedge funds and institutions want to invest in crypto, but they can't because it's just such a crazy asset class where you got crazy candles like the one I shared with you, and people cannot digest that, right? So a little bit of regulation is good. If and when that regulation becomes, too heavy and too much, at that point we'll speak out against it, and that would not be good. But for now, it still is the wild, wild west. You need a little bit of regulation to make it easier for people to use and to onboard. And for those who don't like the regulation, the decentralized, fully decentralized version of things are always going to be there. It's just like people who said, no, we should stick to fully decentralized instead of having the likes of Binance or Coinbase or KuCoin. You need those. They're a gateway drug to bringing more people into crypto. And a percentage of those will never use those centralized exchanges again. They'll head on over to the decentralized world and use those platforms there. But we need a way to get them in. The more, the merrier in this system. Let's take a look at the Fear and Greed, and Fear and Greed sitting at 21, a little bit of a notch down from yesterday, which was at 23. We're just in a bit of an edgy point right now, right? Because we're at such a precarious level on this chart. If I switch back over to the 4-hourly, you'll see it very clearly. Until we get a nice bounce from here, we create a little high above about 39,000. Then we'll start to see the Fear and Greed come back, cool off, and start creating a higher number. So we just need to see something like this, maybe a bounce, a retest at 40, and then start working our way back to the top of the channel here. What we don't want to see, guys, is this just being a fake out to the inside, come back out here, run to 37, retest on that side, and then fall to the bottom of the wedge down to 33. That would be our bearish case, but we have to monitor both situations very carefully and be prepared. What am I doing in this market? Very straightforward, guys, what I'm doing in the market. I'm trying to add on dips. When I see retracements to lower levels, I'm buying where I can. I'm always buying a little bit of Bitcoin. I try to just dollar cost average whenever I can, a lump sum into Bitcoin. Otherwise, I'll forget to do it. And then I'm looking at the juicy coins. I'm looking at the top, mid to high market cap coins. I'm trying to add into those. I don't have time right now for low market cap gems or gaming coins. Not now. Doesn't mean I have anything against them or that they can't blow up. It's just there are too many solid projects right now. Atom, Cardano, Phantom, Solana, Algorand, Luna, Avalanche, all the ones you know we talk about on this channel, Chainlink, Matic, Dot, right? All these projects, there's so many we talk about on this channel that are just at bargains right now, and I cannot take the opportunity to buy into any other coin when I can see true, tried, and tested, great technologically advanced platforms that have been through bear and bull markets, sitting here at crazy prices. Those are the ones that I continue to dollar cost average in and keep my portfolio balanced through those. Hope you guys appreciate this video. Hope you like this blend between technicals and fundamentals. If you appreciate this content, make sure you're hitting up that like button, subscribing. Don't forget to check out NordVPN to get yourself set up on a VPN. Absolute no-brainer. If you don't have yourself set up on a VPN and you're trading crypto, you're taking a huge risk, guys. Check it out. It costs like $2-3 a month. Absolute no-brainer. They also have, I think, a 30-day money-back guarantee. So try it out. If you don't like it, just give it back. Hope you guys enjoyed this video. What I'm going to do at the end of this video, I'm going to link up the video to the Phantom controversy around Andre Cronje. If you haven't watched that video and you invest in Phantom, or even if you're not investing in Phantom, really important that you watch that so you can see the type of things that can happen with altcoin projects. I give my take on it and how it will affect Phantom projects. So click that video and watch it and let me know what you think of it. Thanks for watching. See you in the next one.